Wow, wow, wow. Goodness. What a week. Today's going to be a little bit different in terms of this weekly recap. A lot of news to get to today. Just some points of data to bring up as well. So I'm not going to be spotlighting any specific stocks within the indices. So we're just going to go right into it. Starting here with the Dow as usual. So 5-day change. On the week down 0.43%. And you're going to see this. It's pretty regular. Obviously a wild chart up and down. Overall didn't lead to much increase or decrease, but overall news-wise, very crazy. Very crazy stuff. So that's the Dow for you. We're still up, obviously, almost 15% year-to-date, so still going to take it. So going to the S&P right now. Give me that 5-day. So S&P down 1%, a little bit rough. Today was a big rough part of it too. Definitely got hit pretty hard today. We'll get into that pretty shortly. Definitely a little bit rough. But still year to date up 18%. I'm gonna enjoy it. That's a rough week, but overall, still gonna take these gains while I got them. Show you this 5-day chart here for the Nasdaq. So similar story here, just a rough downturn all week. Down 2.19%. Rough for the Nasdaq. Nasdaq, normally when you see these indices, they normally get hit pretty similar. The Nasdaq got hit particularly a little bit rough for good reason, which I will get into. So as far as the Nasdaq's concerned, stocks were stung by more China rumors. Bloomberg earlier reported discussions inside the Trump administration about limiting U.S. portfolio flows into China. So, wow, what does that mean? Well, for the most part there, that would be what comes out of China usually. There's a lot of these big tech companies, and they make up a lot of the companies on the Nasdaq. A lot of them are, not a lot of them, but many of them are rooted in China. And so this here would be limiting the amount of shares that could be purchased. I don't know what exactly that would mean, what the heck is coming of that, but from what I'm seeing here, it looks like Donnie wants to go ahead and reduce the amount someone can invest in these Chinese corporations, which is rough, and that's why the Nasdaq got hit so hard today. That's what brought it down a lot more than anything else. Just rough. I don't know if anything's going to come of it. Obviously, it could just be a strong arm technique, because earlier this week there was stating that there was trade hope. And obviously, they're going to have their meeting first week of October coming up. So next week, we're going to see what's going on. Going to be exciting to see what comes of that. But this could be rough. We'll see where this comes. I don't know if it's going to be anything. So what overall shook the market? Well, right here. Yikes. Yet again, I mean, we're not going to stop calling for impeachment. No one does for some reason. It's wild. You fail so many times, but you're still going to try. It's rough. This is rough. So, obviously, talks of impeachment. I'm voting for impeachment against Mr. Donnie here. Paul's did a perfect face for him. It's rough. So, historically, in comparison, nothing crazy in terms of indices, because back in the days of like Nixon, the indices dropped somewhere from 30% in a single day whenever they came out with impeachment news. I think for the most part, investors are shaking it off, because this has been a consistent thing since he's taken office, is fear of impeachment. It's rough. I think people are shaking it off, which is a good part. Definitely want people to shake this kind of news off. Don't let it take much of an impact on buying and selling. Just keep the market going as is, because there's a lot of positive things to think about. So even here, the Atlanta Fed boosts GDP estimate to 2.1%. So from 1.9% earlier. So obviously that's fantastic, because anytime we're increasing GDP, we're looking good. We don't want a trend to go downward. So if we can consistently be above that 2% growth rate, just consistently, that's going to keep us out of recession. It's going to keep our economy growing. That's what we're looking for. Obviously, people are still freaking out about recessions a lot less now than previously, because, I think we're looking a little bit better now. People aren't going to be freaking out as much. We got data to support that things are going relatively well. We're making some progress. So quarter two corporate profits in total increased 75.8 billion, and obviously this looks a little bit jarring versus a 78.7 decrease. Looks a little bit jarring. So what's going on there? Overall, quarter over quarter, this is an increase of about 1.5%, I believe, in terms of corporate profits. So if you're comparing to last year. So again, gotta love it. Companies are still growing. U.S. companies are growing. That's what we're looking for. No issues here. So I think that's a positive sign here. More positive data points. And another big thing too, which isn't necessarily recession related. A lot of people do conflate home sales and recession together. It's not necessarily the case. For the most part, recessions, you don't typically see a major decrease or increase in terms of home values. Obviously, people think of it a lot more now, just because in 2008, the Great Recession, we got hit very hard and home prices just absolutely got devastated. So a lot of people are just assuming if we hit a recession again, that's what's going to happen. And there's no guarantee of that necessarily. But we can see here a great sign. People aren't necessarily scared of that. It doesn't look like in terms of sales. So August new home sales, 713,000 versus 662,000 expected. Look at that. So that's pretty exciting. I love to see growing economy. It's a good sign for us. I want us to get rid of that fear of recession. Get people to keep buying these stocks. If they do, we're going to be looking good. It makes me very happy. So let's go ahead. Keep on buying, guys. Don't worry about recession. If it happens, we'll deal with it. But let's just keep on going. Keep this economy growing. That's what I'm talking about. All right. Have a good one.